Good afternoon, everyone. This is a video for ticker symbol NGD or New Gold. Today I want to show you a trade that I took. It was a wedge or descending triangle breakout pattern that I was trading. So I'm going to go out how I found the stock, how I identified the pattern, and how I identified my exit and entry points, as well as determining risk reward, and just go over the trade. So at the time, I had noticed that gold was running, and I wanted to play that move in gold without actually trading gold, and I wanted to do it in equities. So generally, to get big moves, you tend to look at penny stocks. So I started looking at penny stocks, found one that seemed to be liquid enough and kind of meet the bill. And I also noticed that this had a big run down and was followed by what looked like consolidation. So I started charting it out and figured out that following consolidation, it was forming this wedge or descending triangle pattern. It didn't fit the descending triangle pattern well enough because it did break down through the support line, which in this case was okay because it just ended up making a wedge formation anyways. But I left this here as a kind of key support level. So generally, after big moves, you see these consolidation patterns, especially in penny stocks. And this is good. This is generally healthy if it's going up. Good to see if it's coming down, especially if you're a bull. In this case, I didn't care which way it breaks out of the consolidation, long or short. Just wanted it to break out. I saw it around here. I noticed that the price action was starting to get tighter and tighter, and knew that it was going to break out sometime soon. Didn't care which way, but it did break out to the upside. And generally, when it breaks out of whichever pattern you're looking at, you want the candle on whichever time frame you're looking at. In this case, it's the daily time frame, to close prior to entry. However, I did get in a little early, and then once it confirmed and closed, I got in the next morning and added to my position. So I saw this pattern and I saw a breakout. I got in, but prior to that, I already set up kind of expectations of where the stock could go and tried to figure out if it met my risk reward profile that I was willing to take. And generally, you want to take a 2-to-1 or 3-to-1 reward to risk ratio. So what does that mean? So in this case, I identified these red levels as areas of resistance, places where price touched before and failed to break above, or came down and hit and failed to break below. Generally, especially with penny stocks, they're really good about going back to these levels and testing them. And you can use these levels as entry and exit points and to try to determine where it's going and help you determine whether the risk reward meets your trade profile. So in this case, I knew I was going to get in around 80 cents or to the downside around 75 cents. In this case, I was expecting it to break up because of the rise in gold. And generally, all the other gold miners, the junior gold miners at the time, were breaking out to the upside, and I identified this one as a laggard because it hadn't broke out yet, and it was still consolidating the big price drop that it saw. But I knew that there was still room for it to break out, considering the considerable move all of the other gold miners and junior gold miners were making. So I thought it was going to break up to the upside. It did. So I was looking at areas of resistance, and I identified some here because this was the start of the wedge. I liked this one as a possible entry point and what I used for my risk reward profile. So assuming I was going to get in around 81 cents, what's the upside on that? And it's about 30 cents. And so I identified 30 cents as my profit target, and I looked to the downside to figure out, okay, well, if this fails for whatever reason and it does come back down, where would I assume a good support level would be? And that was right here, the one that I identified here at 75 cents. And so I was like, okay, 80 to 75 cents, that's 5 cents. If I'm looking at making 30 cents, then my risk reward is well above a 2 or a 3. So I said, this looks like a great trade, got in, added to my position after the confirmation, and it worked out really nicely. So I had a stop at around 74 cents. I always like to go a little bit below the support level just in case it touches it like this or like this, and or right here on the 31st, and fails to go through. I don't want to get stopped out short, so I set it a little bit below. So I identified that as my downside. It was like 6 cents, and so I'm looking for anything about 12 cents or higher for profits, but I identified the 110 as my target, and that's what happened. It broke out and it kept climbing. It did see this, which did kind of freak me out a little. However, you can see intraday I was charting the patterns and we saw more consolidation patterns, and that's fine, and that's what you got to look at if you want to stay in the trade or maybe get out and take profits because you think the trade might be turning against you. In this case, it was a kind of scary day. I thought maybe things could reverse back and test the prior resistance, which oftentimes it does. In this case, it was making a descending triangle here intraday, which is generally a good consolidation that you're looking for intraday. Post a big move like this from 75 cents to 90 cents, it's actually healthy, and it's what you kind of want to see instead of just skyrocketing up to the moon. It means that it's taking a breath, there's some profit taking going on, and people are cycling into the trade and looking for that next leg up, and that's what happened. It broke out of this intraday and kept going higher. Now, once you start seeing these top wicks, that shows selling, especially at the key resistance areas prior identified, which was 1 cent or $1, and here at 96 cents or 95 cents. And you want to look at the order size on those levels, because sometimes that could be what's going to stop the breakout. If there's a huge order at 95 cents, then you have to see how well it eats through that ask, and if it does, you know it's going to go up to the next one, which it did. You can see here it was consolidating, kept hitting the 95, 96 level that I identified, but it was able to eat through that ask, and so you knew it was going to go to the next resistance level, which is $1, and it did. And then it came back down. Not terrible, because what happened was 95 cents became a new support level, and that's fine. It doesn't matter that you lost 5 cents because it's showing you that it had the ability to run up to $1, and although it did come back down 5 cents, that 95, 96 level became support, and that's healthy. That's good to see. That means there's still an underlying bid ready to push up the price again, and actually gapped up the next day, so you didn't even have to worry about that. Now, there's a few things that you want to look at for exiting a trade, and you never want to get greedy and hold past your profit targets. There's a reason why you picked them. Stick to it. That's my philosophy. So sure, it ran up another 12 cents after my 10 cents, but I took profits, and if you were going for the 120 level, stick to it, and it would have worked out for you because it started declining the next day. Another key thing to look for when selling is volume. Volume's very key in any move, but especially in penny stocks. But a key trend reversal signal in volume is a climax, and you did kind of see that. So that would be another reason to get out. You see volume has really increased, and that could be a signal that a trend is about to change, and that's what happened the next day. Just wanted to identify this trade, talk about it a little, show you what I kind of look for in trade setups, and kind of what goes through my head prior to taking the trade. In the future, I'll post upcoming trades or trades that are about to break out as opposed to ones that already did. So look for more videos to come.